Let's make some passive income.
The world of Snarf.
I recently stumbled across yet another app to try and make some passive income. So this one's going to be a little bit different than some of the other routes that I've been going to make passive income. As you know, I try and make money off of dividends from stocks that I own that pay quarterly and monthly. But I have found another route. So it is similar in that it pays monthly, or you accumulate wealth monthly, so to speak. But it's different because it's not actually a stock. So that's right, I'm talking about bonds. So let me show you what I have found. So I'm going to pull up Chrome here. We are going to worthy.capital. All right, let's log in here, and I will show you exactly what this is. So Worthy Peer Capital. Last time you logged in with this email, so yep, I'll log in again, and we should be to the home page. All right, so Worthy Capital. So this is a company or a business, or I guess a platform that is for trading. Well, not necessarily trading, more for buying bonds. So if you don't know what a bond is, a way to think of it is the reverse of a loan. So when you think about what a loan is, you know you're asking for a large chunk of money up front that you will then pay back over time at a set interest amount. So over time, you know, you're actually paying more than the money you got up front, but it's helpful because you got all that money up front that you needed, and then as things sort of settle down for you, you're able to pay off the loan with a little bit of interest. And that's how the people distributing the loan make money. So think of a bond in reverse. So there are plenty of businesses out there that would love to have a lot of capital. So they want more money. So what they do is they issue bonds. So we, as the consumer or the purchaser, will buy a bond, which is like a loan for that company. We'll hold on to it. That company basically gets the money because we bought that bond at a certain amount. And then that company's obligated to pay back at an interest rate. So then you're making the money off the interest that they owe you for owning their bond. Bonds are very safe, is a very safe means of investment. It's way less risky than the stock market. It's not as volatile, and it typically has nothing to do with the changes in the market. So you're not going to see weird changes in bond prices. You know, you buy it at a set price and it's worth that much. You buy it for at a certain interest rate, and it's typically going to stay at that interest rate. So Worthy Capital is a platform that allows you to do this. It is a pretty interesting and sleek looking platform that I've found, and it actually reminds me a lot of Acorns, and I'll dig into that. But let's just go ahead and look at this site here, and I will dig in as we go. So here's the landing page. It talks about your portfolio. Updated today. So you can see right off the bat, roundups. Oh wow, that sounds exactly like Acorns. What does that mean? So you link an account to Worthy Capital, any bank account, typically the one that your debit or credit card's linked to. And then again, it will monitor those purchases, and it will round up, just like Acorns does, to the nearest dollar, and it will sort of keep track of that until you get to $10. So why does it wait till $10? $10 is the level, I guess, the price of these bonds. So Worthy does $10 increments in bonds. So $10 you get one bond, $20 you get two bonds, and so forth. With this roundup, you can choose to top it off now. Acorns does also offer that feature. So say right now I'm at 326, waiting for roundups to make $10, and then I would purchase another bond for $10. If I don't want to wait, I can just click top off now. It would round it right up to $10, and I'd be purchasing another bond. All right, here's the section, interest earned. So this is where you're making your passive income off of these bonds. So right now, since I'm very new with this platform, I just recently got it, and I haven't had enough capital in here to even start accumulating interest. But this is where it would show up. So these bonds are 5% interest annually. So let me just do some math here, just a very, very small sample size. So a $10 bond at 0.05, so that's annual. 50 cents each year for owning one bond. Okay. The cool thing is, interest is paid monthly on these. So let's take this 50 cents. We'll divide it by 12. That is about 4 cents a month you're getting just for owning a bond. You don't have to do anything. You don't have to research the market. You don't have to purchase stock. It's just for owning the bond itself. So that is your passive income. You're probably thinking, Spence, that's literally 4 cents a month. I could go find some pennies on the ground and make more money than that. Okay, you have a point there. But the thing is, you're not just going to buy a $10 bond and hold on to it forever and hope to get rich. This is definitely something where you would buy in bulk, you would start to accumulate wealth here, and you'd see the numbers grow. So let's continue. Bonds owned, so it keeps track of how many of these $10 bonds you own. Right now, I have 0. Well, Spence, what do you mean you have 0? You're trying to endorse a platform and you have 0? So I have pending transfers, which is another section down here. So you can see I've purchased 13 bonds so far. 13 times 10 is 130. So I'm just waiting for the transaction to go through, and I will then have my 13 bonds. It does take a little bit longer than just buying stock, but it does not take as long as buying into real estate, so it's sort of a nice middle ground as far as how liquid your cash actually is. There's another section here. You can see your portfolio value, and you can see your total invested. So this is kind of where you would see what your total actual gains on the account is. This would be the value of money you actually put in yourself, and this would be what the value of your portfolio actually is after your interest is paid, or just if you get referrals, because there are referrals on Worthy as well. So here you can see there's a withdrawal button and a buy bond button. So withdrawal, you instantly have access to all basically the cash value of your portfolio. They don't advise to pull out from bonds, but they will give you the money you're due if you should choose to withdraw, which is a lot nicer than some platforms. Like when you invest in real estate, if you choose to withdraw early, you could face penalties and you wouldn't be getting as much money. So that's why bonds are another safe investing vehicle. If we keep scrolling, you'll see they have also a cool feature just like Acorns, recurring investment. So should you choose to want to keep pumping money into this regularly and you don't want to have to think about it or log on regularly to actively buy, you can set recurring investments. So right now I have that as active, and I have it set to buy 5 bonds on the 24th of each month. Why the 24th? Because May 24th is my birthday, so I figured, why not just pick a random date. I have a lot of other recurring investments on different platforms, and I'm pretty sure the 24th is not one of those days, so it's just one day that something else can sort of fall into my portfolios. And you can edit this. You can have it buy 1 every month. I don't know if there's a limit to how many you can buy, but you can sort of cater this to what you feel comfortable with. There is a recent transactions section showing what you bought and when. So I start off buying 10 bonds, $100. That was 4 days ago. Then I was like, you know what? I want a little bit more, $2. And then this one bond is from me testing out the top up function up here, and I rounded that to $10, and that's where this one came from. So this is a pretty simple homepage. There's not too much to dig into. There's not too much to get confused with. So it's nice and clean, and I like that. They have a mobile app, and it works just the same. If we dig into account, there is some more stuff we can dig into. So account settings. This is one that is super powerful, and you should always have this selected. And you can see I do. So automatic reinvestment. So what does that mean? So that interest you gain off these bonds, it's basically saying I want that to be reinvested back into more bonds. So you're getting that compound interest effect, which is the 8th wonder of the world, compound interest. It's very powerful. I do the same thing with dividends. When I get dividend income, I reinvest it right back into the dividend stock that produced it, or other stocks that will produce more dividends. So here you can see your bank accounts that you have linked. You can see which ones are being monitored for those roundup effects, and then this is also where they pull the $10 from every time you buy a bond. Tax forms. So they do handle tax forms because it is an investment vehicle. It is considered income. So should you, meet the threshold, actually make money for that year, they will provide tax forms for you to help you with filing taxes for that year. And then we do have the referral section, and I will include my link in the description of this video. The referral is basically, I get someone to sign up with my link, and we both get something out of it. The stipulation, I believe, and it may be updating or changing just because this is still a new and active platform, a new and active app, but I believe it is if you use the link and you fund your account with $100 or with 10 bonds, then you and I will both get one extra bond. So that's like an extra $10 for you and an extra $10 for me. So I will include that link. Again, this is probably a lot safer and less intimidating than M1 Finance, than Acorns or anything like that. But the $100 stipulation on the initial account setup may deter quite a few investors. But it's totally up to you. You can see here I have someone that clicked the link and started the process. Do I know for sure if they're going to finish it, if they're going to fund their account? No, but at least they kind of took a look at Worthy and wanted to see what it would do. So those are all the cool features that Worthy has. I guess a little background on what Worthy truly is. These bonds are from small businesses that need capital. So don't think you're supporting big capital, big business, hail corporate, or anything like that. So Worthy is designed, or I should say they're kind of dedicated to supporting small, I could say local, I don't know if they're local to Columbus or not, but small local businesses that need capital from us investors, so to speak. So they sort of pool all their funds together to make these bonds, and then we just buy these $10 bonds here and there, and the money is distributed back to these businesses so that way they can operate. You don't really get to see which businesses you're supporting. I did actually email Worthy and ask about that. I want to know, hey, is it possible to see where this is actually going, where my specific funds are? Unfortunately, they said they can't due to regulations. That's totally fine. They were transparent with me. They said they couldn't. They might, in a broad sense, say, hey, these are some of the companies that we support through Worthy, so you could possibly be funding them. I thought that was kind of cool. So if that ever comes out, I'd be interested in seeing, excuse me, I'd be interested in seeing what type of companies I'm supporting with my bonds. But if you guys are curious, and this is going to be a small sample size, but let's just take my $130 that I have right now, and I know that's going to grow because I'm obsessed with passive income. So my $130, I'll just do it as dollars, times the 5% annual yield. That's $6.50 a year just from that $130 initial investment. That's not including if I keep the reoccurring investments, which I will, if I keep the roundups, which I will, and if I continue with the referrals, which I will try. So that's not taking into account the continued flow of bonds into this account. It also doesn't take into account the fact that you'd be reinvesting the money you're earning from interest. So there's a lot of different factors. This is just bare bones. So that's $650 a year. How much would that be monthly? So that's about 54 cents I'd be getting monthly just off of holding on to these bonds. So that's pretty cool. That is passive income that works similarly to how dividends work. The caveat here, I think, and something that you can consider and weigh, is that with dividends, your stock that produces the dividends has the chance of rising in value, so you're getting extra value there. At the same time, your dividend stock could also decrease in value, so you lose some value of your portfolio there. You're still receiving dividends, but you want to see, is it adding to your capital because your stock appreciated, or are you trying to make up for what you've lost in your stock value. With bonds, you don't necessarily even have to worry about that. You bought the bond at $10, the value of that bond is going to be $10, and then you're just adding the interest from the bond into that value. So you can't really lose money there. It's just going to keep adding on top of it. The only true way, and it hardly ever happens, and Worthy has basically spread their bonds out to prevent it from happening, is if you put all of your money into buying a bond from a single business and hoping that they would return interest to you, and all of a sudden that business sort of defaults, goes bankrupt, and they are unable to pay back the bond. So your bond would be basically garbage at that point. So there'd be like no actual value to it. The way Worthy sort of gets rid of that or negates that is these are $10 chunks. You're not buying a huge bond worth $10,000 or whatever. So you're buying these in $10 chunks, and they're from all different businesses. So, all your eggs aren't in one basket. So that can give you some peace of mind. So that's all I have right now. I'm going to keep this updated. I'm going to update my Instagram, my other videos with some of these. And you can hear my dogs barking, so that must mean it's time to end the video. So I apologize. Delilah's back there getting a little restless, I guess. But that's all I got for you on Worthy Capital for right now. So I'm hoping this will be a cool new way to introduce investors or introduce newbies into the investing world if they want to play it safe and have a almost a sure way to gain interest and gain profit. So if you guys like this video, go ahead and give a comment, a like, go ahead and subscribe. Keep following along if maybe this is a route of investing that you'd be interested since it's a little bit safer. I will catch you guys in the next video. Thanks.